Frontier markets are often characterized as very small and developing countries with low per capita GDP. In terms of location, there's many frontier markets where there's good investment opportunities in sub-Saharan Africa today. And you can invest both in Eurobonds and also in local currency government bond markets in many of those countries. Outside of that region, there's many frontier country opportunities in Central America and also in Latin America. In addition, we see frontier countries in North Asia. Investing in frontier markets can offer you much higher yields compared to mainstream emerging markets, and that's really where a lot of the appeal is. In addition, a lot of these countries nowadays have much more sustainable debt levels and therefore can service their debt without having a high risk of a credit event. The biggest risk in frontier markets is political risk. That's down to the fact that in many of these countries you tend to have one dominant political party where there's very little opposition. In addition to political risk, you also have liquidity risk in these markets. By nature, these are much smaller and shallower bond markets, and therefore investors will encounter more liquidity risks compared to mainstream emerging markets. For us, it's all about doing a very thorough due diligence process to try to assess these risks when it comes to investing in these frontier markets. By that I mean very frequent country visits, speaking with representatives in the official sector, also meeting with government officials, not only in their countries, but also during visits to London and during the IMF and World Bank meetings. One interesting frontier market is Nigeria, which has just gone through a transformational election. And why is it transformational? Because we saw not only did the opposition party win, but it won by a very large margin, so therefore its mandate is very strong, coming in on a platform to address corruption issues, to address structural reform issues which have gone unaddressed in recent years. So this is why we believe this could be a very attractive opportunity in the coming years. Another country to highlight would be Dominican Republic. It's a country with very modest debt levels. In recent years, debt levels have been coming down, growth has been picking up, have a very credible central bank. And importantly, you also get double-digit yields on investing in local currency government bonds. I think the outlook for frontier markets still remains attractive for us as investors. We see a good opportunity to invest in a number of countries in Africa, in Central America, Latin America, and also Asia. Issuance right now is very low, so very modest issuance, so you're not getting hit by a lot of supply of bonds. Local markets, there are some risks out there right now because currencies have been a little bit weak in the current environment, but investors are still getting the opportunity to invest in very high-yielding local currency government bonds in many of these countries.